Okay, the topic for discussion is deferred tax, which is covered by International Accounting Standard number 12, IAS 12. We'll be focusing on the following issues in the course of this discussion. First, we want to understand the nature of deferred tax and why it's an issue for accounting statement preparers to consider. Number two, we want to understand how deferred tax arises, using some short examples to demonstrate the point. Number three, we'll learn about the process by which deferred tax is computed, and we'll undertake some practical calculations of deferred tax. And finally, we'll learn the accounting disclosures and the presentation required in respect of deferred tax. So let's get started. So what is deferred tax? Okay, the first key point to grasp is that deferred tax is essentially an accounting process. It's not something that needs to be done for calculating a company's actual tax liability for a period, nor does it represent a tax amount which a company expects to pay to the tax authorities. Instead, it's an attempt to calculate the tax impact of the difference in treatment for tax purposes and for accounting purposes of items contained in the financial statements. So you can see the first point I've made is that it's a measure of the consequences of differences between the tax treatment of certain items and the accounting treatment of these same items. This is a fundamental point, and I'd like you to keep this very much in mind. Tax rules and accounting rules diverge in many matters. We've seen this in all of the examples we've looked at when calculating taxable case 1 income of a business, or its tax liability. For example, accounting depreciation is deducted from income in arriving at accounting net profit. However, it's added back to accounting net profit to compute case 1 income. Other examples are shown on the slide. You've got accrued pensions, which are deducted in arriving at accounting profit, but not allowed to be deducted when arriving at taxable profit. And a similar outcome for entertainment and fines and penalties. These are deductible for accounting purposes, but not deductible for tax purposes. So the essential point is that the accounting income, the accounting net profit for a period, and the taxable income for the same period can radically differ. The extent of the difference depends upon the nature of the items contained in the company's financial statements. One of the problems that this would cause in the absence of IAS 12 is that if investors examine a set of accounts, they may be confused by the value of the tax charge relative to the company's profit. So for example, if an Irish company has a profit of 100,000 for a period, all of which is from trading income, so case 1 income, the investor might expect the tax charge for that period to be 12,500, given that the standard rate of tax on trading income is 12.5%. However, due to the divergence in treatment of items for tax and accounting purposes, it's entirely possible that the company pays an amount of the tax which is greater than or less than 12,500. It depends entirely on the nature of the items contained in the financial statements for the period. So we'll have a look at an extreme example of this on the next slide. Okay, so the focus on this is the impact of research and development expenditure and on your tax liability. As we've seen in previous classes, a company can get 100% immediate relief on R&D expenditure in the year in which the expenditure is incurred, whereas for accounting purposes, the expenditure may be partly capitalised and essentially amortised or depreciated over time. So this is going to lead to a situation where there's a big tax break given at the start, which is then unravelled or reversed over subsequent years. So in order to look at this, we'll have a look at an example of this in the question called cyclical limited. Now you need to have the package of deferred tax questions open. The first question in that package is the one under review, and you should also consider downloading the solution to the question from My Docs.